Good morning, good afternoon, good evening all over the world. Dobson 777A here. Okay, I'm going to do something a little bit different today. Normally, the type of content I'm going to present today would only be for members only, but I decided that this is so important for everyone to see. The decisions that we have made a phenomenal improvement in our financial position. And so I'm going to give you a larger view that should help you get a better understanding. And I'm also going to dive into some of our holdings, some analysis, and specifically like Kirkland Lake and some of the royalties that we're holding that have actually done phenomenal, especially some of the micro royalties have done phenomenal. So anyways, let's take a look at what we've got here. Right now, gold, again, is on the cusp of breaking out to its all-time highs. We are right there, folks. We're only within like 16, 18 bucks. I forget what the number is off the top of my head. But this is super close. Silver is hanging in just below 23 bucks, which is also very good. So don't know yet, if this is going to continue going the way it's been going, because it has been on a tear. But we are at the point where I got a feeling the media is going to go, hey, something's going on over here. And other people are going to go, what do you mean? And what's it done? And when people start seeing how much gold, silver has done versus the S&P 500 and others, I think people are going to go, wait a minute, I'm on the wrong bus. In fact, here is our chart. I forgot to show SPY the other day. Now, I showed you previously a historical chart where the SPY broke down at this point and it never got back on track, where gold has just continued on and it has way outperformed the S&P 500. Now, this is without dividends, but I've run the numbers previously and it doesn't help this that much. But SPY since about August 2018 is only up 13%, where gold is up 56.5%. Now, silver has raced back just in the last couple of weeks and it's up 48%. So combined, these two are destroying the S&P 500. So, if you know a bunch of folks that are still playing in the stock market and they haven't got the word, you need to pass it on that they're in the wrong game. They're on the wrong side. You can see the S&P has not even recovered from its previous high back here at February this year. It's still below there, where you can see gold has gone way past and silver's gone way past. So you're in the wrong game if you're just in the regular stock market here. Now, this is looking at my entire portfolio and comparing it over actually this is May 2019. But you can see that the green is my portfolio and then the blue is the S&P 500. So again, you can see we're handily outperforming the S&P 500. It's like 50% versus 16%. If we had not sold off some of the miners here, we would have been destroying this even further. But that's okay. I mind my stops no matter what. But we kind of know how things are going to go, and we may do things differently next time. But if you look at this, this shows you the brilliance of this investing philosophy. We have been on the right side of this trade. Now, for the first year or so, we were kind of even with the S&P, not destroying it, but now we're destroying it. And that's the way it's actually designed. And it's just going to get better and better from here, because we're getting a fantastic hedge from the fact that the market's not doing anything right now. Now, there was an interesting article, Gold Switzerland, Financial System, a Hubris Swindle, and he talks about the amount of damage that the governments and bankers are doing to the economy. And it's just all this printed money is just going to be a huge problem for, thinking about just the value of the dollars. If you're holding, a bunch of US dollars and they end up printing a bunch more, the dollars that you're holding are going to be worth significantly less. And that's the beautiful thing about the precious metals. They tend to accommodate the fact that there's additional dollars, and they will increase in value to compensate. So I'm just going to, you can look up here and you can see where this is and go read this, but I just wanted you to see the 4 factors that drive the gold price. Major debasement of currencies, money printing, substantial shortages of gold, major new private and institutional gold investors. Like I said, when we start hitting these major milestones, especially if silver gets to about 30, look out, folks. This thing is going to explode. Only smaller quantities of gold available at current prices. So it's going to drive it up significantly. And then you're going to have, like I said, gold's going to go to no sale. I'm not going to be selling my gold when it's going up, $100 a day and stuff. No way. No way, Jose. And so that's just going to make it up go more because there's less available for people to purchase. So keep in mind, these type of things are right on the horizon. All right, so let's talk about this improved portfolio, which is smack full of all kinds of interesting individual stocks, as well as the ETFs that are in the ETF portfolio up here, which, by the way, very simple 5-position portfolio is up 39% for the year. The improved portfolio is up almost 42%. But I want to talk about some of these royalties we have, like Franco-Nevada, Royal Gold, Wheaton Precious Metals, MMX, ELYGF. I think I forgot to grab the sand data, but we'll catch that at another time. But anyways, let's talk. Oh, and I also wanted to cover Kirkland Lake. Kirkland Lake has been lagging in the portfolio, but they had purchased Detour Gold last year, and the market did not appreciate that purchase because it was like a lower grade gold miner purchase. But reality is, since gold has gone up tremendously since this purchase, I mean, I think it's up like $400 or $500 since the purchase. This is going to end up looking like a steal, is what the analysis is indicating. So right now, I think Kirkland Lake is tremendously undervalued, and you probably still can purchase this and do very well. It's only up 9%. We will probably see Kirkland Lake go to $55 in no time, and then we'll see what happens after that, because they're continually trying to get additional drill results and find additional reserves, and that's going to continually drive the price up of this stock. So Kirkland Lake is something that I would argue is an unbelievable buy still. Just, if you need to walk into a little bit, you notice I'm not holding a lot of Kirkland Lake on this one, but I got like $1,200 is what we started with, and this could be a nice, stable. It's a large company, so it's going to be a stable stock for you. Wheaton Precious Metals. Now I'm looking at its stock price, and it was probably around the beginning of, or maybe the end of 2020. It was sitting about maybe $28, and now looks like it's maybe around $48 or something. What does it say up here? Oh no, it's like $54. Okay, so this thing has gone hog wild. This is a great stock, but a lot more volatility than Franco-Nevada. Okay. I look at these two right up here. Franco-Nevada and Wheaton Precious Metals are like my top 2 royalty companies that I use for my foundation. And but I would argue Franco-Nevada should have a larger position than Wheaton Precious Metals. But anyways, it has done very well this year, and it is, since March, it's gone from like $25 to $54, so it's doubled. This is it's got tons of streams. This is a very large company. It's like $6 billion in assets between all of its royalties. So this is a monster company. Now Franco-Nevada has 293 mineral assets, 56 are producing properties, and 35 potential production within 5 years, and 202 in exploration. So it is a $4.5 billion royalty company, and this doggone thing has gone from, let's say, the end of last year, it was sitting at about 80, and it's currently at 158. So it's doubled since December, folks. That's incredible. And it dropped down to, let's say, 90, and it's up to 158 right now. So in March, that's when it dropped down. So Franco-Nevada is probably, I would say, so far it's been the gem of everything. You look at that 53.46 for a very stable company. Again, Wheaton Precious Metals has much more volatility, as we've seen, but Franco-Nevada is doing great. Now, Royal Gold, we were holding that last year. We were holding a full position, and I recommend you cut to a half. And we're actually pretty smart when we did that, because this stock has not done really anything through all the last year to this year. It's still about the same price. Now, if you had purchased it back at the bottom of March, it dropped down to about 70, and it's at 136. So you would have got a double if you'd have bought it on sale. But this one, we're still just holding a half a position. It's a good company. They may kind of get things together. Some of these things may start coming, especially as gold now is like $1,900. You're going to see some of these things continue to increase tremendously. Now I'm going to get into a couple of these speculative ones. So Maverick Metals was one of them, and this is I think I forgot to say Royal Gold is like a $2.5 billion company, but Maverick Metals is a $216 million company. So this is a dinky little company, and its stock price has not really done anything yet. It is still sitting the same as what it was back in August 2019. There's not really anything significant going on with this. But there are a whole bunch of deals that it's working on. And again, a little dinky company, if it hits any of these very speculative things that it's working on, you are going to see tremendous improvement in the price. So they acquired 3 royalty companies. It had 11 gold fields in December 2016 for $51 million, 36 in Nevada, and 25 royalties and streams from Kinross Gold. So this is a company that, again, we got a little bit in here kind of watching it, because it may, actually that's a fairly large position we're holding there, but I think the royalties, this hasn't really hurt you any, and this has a very high potential. So we're willing to throw a few bucks in there to kind of see how things go. But it dropped below $3, and it's up to 4.78. So it hasn't done a tremendous rebound yet. Now the one that again, some of these things, what we're doing is we're front running some of John's Duty's portfolio. These are things that are not held in his portfolio, and they are actually things that will allow us to potentially get picked up over time. So it turns out this one we hit a jackpot, because when you look at ELYGF on the screen, you'll see that it is up 72%, and I think we put this one in February. So we had invested $1,000, and we're up $723 on this. Now on my side, I think I'm up 99% on mine, because I think I'd purchased at a slightly different point. But in any event, back in March, this was 40 cents, and now it's $1.40. So if you'd have picked it up at that point, you would have done even better. But this particular one, again, is a very aggressive management, and it's only $14 million asset it's held. So it may be one of these things that we'll see over time this turn into a Franco-Nevada, and I want you to understand that it's good to throw some money in these dinky things, but just a little bit. You know, make sure you're filling up the foundation first. You want to pour those footers. You want to have like your physicals, like 80% gold, 20% silver. You know, if you want to spice it up a little bit, get 10% platinum, take that out of your gold. and then filled up with Franco Nevada. So you can see I got like I invested $1,700 in Franco Nevada, and then 1,700 and something bucks for Wheaton Precious Metals. You can get some of these ETFs to kind of spread the risk out a little bit. You see we put 4,700 in GDX, and then slightly less in the GDXJ, and even less in GOEX. Same thing with SIL and SILJ. 80% gold, 20% silver. So anyways, I wanted to give you the background on this because we are killing it right now. We are absolutely killing it. We're destroying the market, and this is what I recommend that you do. You diversify in these particular things. Royalties, we have a fairly large position of royalties here, and it's paying off handsomely, and I knew it would. So I hope you're understanding the methodology, how I do what I do. But 42% for the year, we're not swinging for the fences here, folks. This is a pretty conservative portfolio, and to have, John's portfolio, he's up 30% for his silver positions and 22 point something percent for his gold positions. But when I look at the way I'm measuring here, he's up 30% for the year on probably an even more conservative approach. So I've kind of spiced this up a lot more. And again, I'm front loading some things that he may end up putting in his position later. Now imagine what's going to happen if all of a sudden he picks up ELYGF or MMX. That position is going to double overnight or more, triple. And so there's a benefit of trying to get in ahead of some of these. And we've already, like I said, look at this, ELYGF 72%, and this isn't even on John's portfolio yet, on his radar. It's not in his portfolio. It's strictly on his analysis list. So I thought it'd be good to take a chance. So anyways, I'm watching all of these different other portfolios that I have access to, and I'm trying to pull off some things, even like CXBMF. This was off of another one that I had reviewed, and I said, hey, let's go ahead and get a little bit of that. Well, we're up 95 point something percent here with that. Kind of like VNNHF, that was given us to a free one. Well, we're still up 54% for the year. That's phenomenal, folks. People would be screaming and hollering if they had those kind of returns. Remember, S&P 500 is only up 13% over like a year and a half. That's horrible. We're destroying it here, folks. This is in a year, 42%. All right, so I hope you understand. We are doing great stuff here, and I hope you're benefiting from this. Like I feel like I am. I'm just ecstatic that I got in when I did, and we're just going to keep learning. We're going to keep improving, and that's all we can do. Remember, do the best you can. That's all I tell you. All right, I'll talk to you later. I hope everybody's treating you well. I hope you're doing well. Do the best you can. God bless.